Hello pension subscribers and welcome back to the channel. Today we're going to be talking about a topic which often gets forgotten in financial advice, which is the ongoing service. So much of my content on this channel is focused on the initial advice process. How do you get a DB pension transfer done? Should you be considering it? Might it be suitable for you or not for a pension transfer specialist to review for you? Today I'm going to move on to the ongoing service and what happens here at Cameron James and how we look after our clients. If any of you would like to book in for your free initial consultation, you can do below in the link in the description, or you can head over to the website or watch some more videos to do a little bit more homework before you wish to contact me. You can also book in via the WhatsApp link in the description as well if you wish to start a more informal conversation. Okay, so to start off with, in terms of ongoing service, it starts after a long period of initial service. As you would have seen from many of my videos, a pension transfer, whether it's DC, SIP or DB, can take anywhere between 3 to 9 months now. Clients always bulk at me and say, that's ridiculous, why would it take you 3 to 4 months? I spoke with an IFA last week that said he can do it in 2 weeks. I'm like, yeah, well, good luck. Good luck working with that IFA, because either they're completely uneducated, never done a pension transfer before, or they're completely lying to you to try and win your business. Nobody wants to be told it's going to take 2 weeks, then it takes months and months. As you may have seen from some of my other videos, a money helper telephone call, sometimes the waiting list for that can be up to 3 weeks. So at minimum, that's a 3-week period, plus getting your CTV, plus getting the advice, etc., etc. So anyway, once you reach the end of your 3, 6, 9 month advice process, that is when the ongoing service starts for your pension assets. So, ongoing service is arguably even more important than the initial advice you get. Initial advice is obviously very important, not to end up in commission bonds, not to end up in commission funds, to have a clean, transparent start to your portfolio. However, on an ongoing basis, how that portfolio is managed and your relationship with your financial advisor is of paramount importance for your financial planning. Now, to be clear straight away, here at Cameron James, we're not day trading, we're not weekly trading, we're not even monthly trading on our clients' assets. We take a long-term portfolio view of the market and have a good spread diversification with a weighting between fixed income and equity. Obviously, with the adventurous portfolios having a higher weighting of equity, typically maybe 80% weighting, a balanced adventurous maybe 70% weighting, a balanced portfolio maybe 60% weighting of equity, and the rest being fixed income. But what is really important in terms of ongoing service is having that relationship with your financial advisor and explaining what is going on in your life. What changes are happening? Are you moving abroad? Are you moving back to the UK? Say, for example, you live in a tax-advantaged jurisdiction such as the Middle East. If you're planning to return to the UK, what might you be able to draw down from certain investments before you return? Other things such as, are you going to have an early retirement, a late retirement? What are your children doing? Education planning, grandchildren. And then you start flipping the other side of the coin, inheritance tax planning. As people get older, they suddenly realize if they've been pretty successful in life, hey, I've got more than IHT allowance in the UK, which is currently £325,000 per individual or £650,000 per couple. Plus, it basically means a circa $1 million if you have a main residence as a couple in the UK as well. So ongoing service is really important. Financial advisors may be very good at showing at the beginning and all this work and whatever, but you have to ensure that person is going to look after you over the long run. Here at Cameron James, how we work in terms of our ongoing service, and we've tried many different models over the course of the years. When I started out in this game, I used to do a quarterly market quarterly market review with all of my existing clients. What I can tell you after feedback of doing that for probably about 5 years is there's not a lot to discuss every quarter. And it almost becomes a little bit monotonous because you're looking at a portfolio that's only changed from 3 months ago. Sometimes there's not very much to report, and we're not making changes on a quarterly basis like that. In my opinion, it's a too shorter term view of the market. And when you're looking at things quarterly, it can almost help highlight the noise in a portfolio. Okay, Russia and Ukraine has happened, this has happened, and the portfolio can go up or down quite wildly. Whilst if you actually look over the course of a year, the performance will normally be much more settled. Take, for example, COVID-19. On the 1st of January 2020, a portfolio was actually up on 1st of January 2021 by the time the markets had evened out over the course of COVID. However, if you've been checking your portfolio every week and every month during the middle of COVID-19, you would have been panicking because markets are going up, markets are going down. But actually by the 1st of January 2021, all of our clients' portfolios were higher than they were on the 1st of January 2020. So in terms of ongoing service of our clients, we have a quarterly market analysis, which is personally written by myself, which goes out to all of our clients. I'm just going to share on my screen now so you can have a little bit of a look as to sort of what to expect. So this is the email which goes out to our clients, quarterly market analysis. Hi Mark, I'm using Mark as another example. He was our Money Helper call client. Hi Mark, I trust you're keeping well. Please find below my quarterly market analysis. Estimated reading time, 23 minutes, 45 seconds. These have got longer and longer every quarter. I think they started off at about 5 minutes, but every quarter that I write them now, I just feel like there's a lot happening in the economy over the past couple of years, and invariably I want to try and cover it all off for my clients. A lot of my clients are not necessarily keeping in touch with the markets every single day and every single week. That's not their job, that's my job, that's what they're paying me to do. So in this quarterly market analysis, I'm trying to break down for them what happened in the quarter, what are the salient points, why has their portfolio gone up or why has their portfolio go down. It's not necessarily giving individual feedback about their specific portfolio, but we use model portfolios here at Cameron James. So a balanced investor on one day would very possibly have the same investments as a balanced investor speaking with us at the next day. So a quarter to be forgotten. This was Q3 2022, obviously a very difficult quarter. And then obviously here we have our thing just telling clients they can save 10% on initial fees and ongoing advice by providing referrals as well. So if I click the link here, it takes them through to the full quarterly market analysis. As you can see here, we go through, it just gives a breakdown of what's happened in the quarter. Boris Johnson, unrepentant resignation, enter Liz Truss, the Fed and the Bank of England exchange rates. Queen Elizabeth obviously happened in this quarter as well. Central banks synchronized tightening, talking about effectively bringing interest rates up and reducing the flow of capital in the markets. When will the central bank stop? UK behaving like an emerging market. This was some analysis of what's happening in the UK for GBP, etc. We then go on to talk about the mini budget. Thankfully, by now, we all know that the mini budget has been scrapped, but at the time we didn't know this. Clients didn't understand what was happening in the market, so it's really important for us to help them understand these things. We outline why it was bad, ill-conceived, bizarre, and a sleight of hand, as the mini budget was actually a way, you're supposed to have it forecasted from different bodies in the government. USD on the rise. Cameron James, a bit of information here. Jonathan Laws, our advisor, was at the FT conference in London. He was stepping in for me and did a very good job there, letting everyone know our opinion on that specific topic. Equity market research, on and on and on. And basically this is our way of just helping clients understand. We also had very positive feedback this quarter from the Money Helper telephone service from one of our existing clients. I actually have another video on that on the channel if you want to have a look. And then we have my closing remarks there with a new little avatar of myself. So these go out to our clients every quarter, with the possibility for them, effectively with myself or any financial advisor at Cameron James, our clients have the ability to book in on an unlimited basis with our clients. Now, in reality, no clients books in every day because there's nothing to talk about, but they have our Calendly links to book in at any time which is suitable for themselves without needing to call or ask for times. They can book straight into our diary. And what we say to all of our clients on top of the quarterly market analysis is every January time or whenever your annual review is set with your financial advisor, you need to be putting aside a minimum 30, 45, 60 minutes to sit down with your financial advisor and really go into things in detail. Doing the annual review also allows you to analyze the portfolio. Okay, the portfolio is up by 7% this year over the course of the year. 7% doesn't mean anything. While 7% is a positive, if the markets have gone up by 12%, your portfolio has gone up by 7%, you've underperformed the market. As such, your financial advisor has done a bad job of managing your money. If your portfolio has gone up by 7% and the market grew by 2%, your portfolio manager has done an excellent job at growing your money. So you need context in terms of your percentage growth rather than just, is it positive or is it negative? Is that good or bad? It doesn't really work like that. So for example, some clients, they'll say, Dominic, my portfolio is down by 3% over the course of the quarter, or over the course of the year. I'll actually say I'm extremely pleased with this because the rest of the market is down by 7% over the quarter of the year. So actually your 3%, we've made you 4%. It's called outperformance against the market. So that's my review on ongoing advice. It's really important. And also having a really good relationship with your financial advisor, feeling comfortable to share anything with them. I always say to any of my clients, if you ever have any concerns, anything like that, get in touch. And also, we are here to help you in other areas of your finances as well. I'm not a qualified tax advisor, I'm not a qualified accountant, I'm not a qualified lawyer. However, if you have a problem, if you want to bring it to me or one of our financial advisors, they will help give you their layman understanding of it. They may even go off and do a little bit of research with obviously just a caveat at the bottom of our emails that we're not legal, tax, and obviously if you need official advice, we advise you to get independent advice from a specialist in that area. Guys, I hope that's been valuable for you. It gives you a little bit of an understanding of how ongoing service works, what you get in return for the fees that you pay us here at Cameron James, and I look forward to hopefully speaking with you soon. And as always, take care with your UK pension assets.